Good morning, everyone. Today's Friday, November the 3rd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. I wanted to start, pardon me, I wanted to start with a look at yesterday's move and how broadly green it was for the most part, right? We still have some pockets, right? And these, I think, were just people sort of taking profit when they can and other sorts of things. But Eli Lilly moved very well after the earnings space. We took the long put side off. That means we had the short put side on, and it did fantastically yesterday. It may continue, but let's take a look at a week. All right, very green week from the left side of the chart, and okay from the right side. Chevron's still suffering from this purchase of Hess, and so we'll keep watching that. And of course, Moderna came in, and these guys, that vaccine was their lifeline, and I'm not really sure they're going to recover, but that's just me. In any case, what we're seeing is a fairly big move forward. Not so hot, and I think really it's because of the concessions that they made in certain places, and then a couple of different news events in terms of how much. Enphase absolutely falling off of a cliff, and the reason for that is that they actually got kicked out of the NASDAQ 100 at the end of October, and this was really, something that people saw coming, so that really looks dreadful. All right, I'm not really sure what happened on semiconductors, but as you can see, the semi complex is doing very well. AMD moving magnificently up into the space. So that is super interesting in the long run. All right, now let's get back to our charts. Just a review. Let's see what happened. All right, we had this line in the sand. Remember where buying pressure comes from, underneath. And day before yesterday, I said, listen, as long as we hold the close of the prior day, we're going to be fine. Now, we have the jobs number coming in just a wee bit. I'm going to try and get this up before and well into when that happens. And that jobs number is going to do something. But here's what I want to share with you. The bond market on Wednesday began to react incredibly significantly to the FOMC chair speech about what should happen with the rates. And so I do believe that Fed Chair Powell really sent the bond market into a tizzy, and that absolutely took off, right? I believe this one was, this is Wednesday, and that is insane. He began talking, and they're just running up, and that's really because he's saying, listen, we're going to hold things pat. We're going to let this interest rate work through the system, and we're going to see what's going to happen. Now, people are anticipating that that means that he's going to reduce rates. I'm not really so sure, but we do have a TLT position that I think is going to end up working fairly well and potentially come into this line in the sand up here at the 88 level. We'll see how it goes. All right, now let's get back to the levels today. We could have, here's the thing, these are reflexive moves built on conversations online, Fed speaking, and what the bond market is thinking, and it's created a huge rally. In general, and I can't even, this isn't even general, but if we look at 2020, which was a monstrosity of a move, we can see that these motions from a monthly perspective just sort of grind upward, and then by the end of November, where seasonality takes over again, it was just insane, right? 2021 was just an unbelievable move, but notice the size of these candlesticks. This is bullish, but it's bullish motion that is reasonable in size. Now, what we have a tendency to see is any big reflexive moves that send us into resistance or support end up being retraced. So the bigger, more massive the candlestick, the more likely it is to give back some of its motion. All right, there's the backdrop. Now, is it bullish? Yes. I got to undo that move. Let me just remove the sequence so we don't have it in the way. Now let's have a look. Up, look at this savage move down. It moves back up, moves down almost twice the size, almost the same size as the candlestick, moves up. So we got some big wicks here. Big move up, 50% retrace. 3 big moves up, complete retrace. All right, so this is not a place to go, hey, we're out of the woods. This is a V bottom. I'm off to the races. You can clearly see from the daily chart that we are inside of a Keltner band that is downward in motion. And that is across both the day and the week. Now, that being said, where's the line? Listen, as long as we stay above the close of the prior day, we are going to have bullish action. When we breach into that area, this is the next line in the sand for us. I have 431.70. Maybe we move, maybe we move that up just a hair so it's closer to all of these. 432, that's going to be the region that we're looking at. Of course, Fed Powell had these numbers. They're going to probably be good. The question is, how much of the good numbers is now baked into this space? All right, so my thought is cautiously long, don't break the overnight low, and as long as we hold the close, we can buy the dip. Once that loses pressure, we're going to have to look at the 50% marker for price action. Do we have to? No, we don't have to. But it is reasonable to expect that this number around 424 to 426 might provide some kind of support for any kind of fade. Upside pressure, what's next after 432? This is a short squeeze, folks. Make no bones about it. This move is too fast and too reflexive to be anything but a short squeeze. It's just the way it goes. This is how these kinds of markets go. I've been around for 20 years, trading almost every single day. This is reflexive motion. Let's take a look. Excuse me, I think I'm coming down with something again. Let's take a look at this. Now, we came right into this edge, and indeed, we broke it. So let's draw the line that says, hey, just so long as we stay over this 362, we're going to be in good shape. Now, Apple didn't do so well. It's down about $4 or $5, but this market is in a broad motion of upside pressure, right? Here's Wednesday. Powell, the most sensitive to interest rates are the small caps and the NASDAQ. And you can see that running. What's the next line in the sand? 364 to 366, potentially. We'll put that 366 there. Once we lose this edge, if you're long, folks, take a breath and wait for it to retrace. It could come into 357. It could be super strong and come into the base of the gap at 358. Your goal is to watch price action and realize buying pressure comes from underneath. So as long as you are holding higher lows on the big picture, you're going to be in good shape. The moment that higher low breaks, you've got to step out of the way to give the chart room to run. We don't normally look at the IWM, but it should have had, here it is, huge reflexive bounce off of that area. Trend is massively negative, but take a look at these monthly charts. That's why I always say look to the left. Buy zone, and again, last month, buy zone with the low here. Now, this is picking a bottom. Certainly, this is picking a bottom. And so if we take a look at this, we can say, all right, my month began, and I am well above the close of the month, but how am I in respect to resistance? 173 to 174, still a resistance zone. Can you buy this? Yes. These guys are the most beaten down. They could have a beautiful move to the upside right there off of that 170 marker, or you might have to go to the old resistance breaks, which are back at 165. If I were a betting man, I would say here, but a lot of times in bear markets, this gigantic move happens very quickly, and by the time people start going, oh, okay, this is a real move, it begins to retrace. All right, now let's take a look at the ES. Quickly, we've got, of course, the massive move. Here is 43.50. Absolutely fantastic. Big, big, big move. Notice here is, whoops, wrong one. Here is the line in the sand we have to hold, right? 43.34. All right? And we got below it and now above it. Are we still holding a higher low? You betcha. You betcha. But where is the old resistance that turned into the newest group of buying pressure? That was up over, I think, above 43.04. But it actually did start somewhere around, 42.94, right? And you guys, if you've been following me, you know this number very, very well. Okay, so that's what we're looking at. What's above it? 43.68 to 43.70. 43.68 to 43.70, and then up here. Do I think it's going to get there? No, I really don't. I don't see newer highs. There's a lot of stuff that's got to get shaken out, and the market's got to rip the head off of some late longs or some shorts that are just not willing to give up the ship quite yet. There are a lot of people thinking we're going to have a terrible hard landing, and that's going to bring markets down. Look at this channel that we built. This flag pattern shows that we could get all the way up to 15,350. So let's mark it. 15,350, 15,390. That's the top of this range right here. I'm going to move this rectangle out, right? That's the range that we were sitting in. This flag pattern, absolutely beautiful. I honestly cannot believe it worked that well to come right off of that level, but certainly we could have done that. Let's move this to this congestion zone. This is where primary motion is on the weekly chart. This is where it is on the daily chart. So we're looking at 15,135 to 15,392. We've got to stay up and over the close of the prior day, and that is 14,009. What is that? Close 14,970, and there they are breaching it. Pullbacks are buy zones. Where's the area we could see heavy congestion on a retrace? 14,945. If you're running something like a 5-minute candlestick, be very careful, watch these edges, and realize the second you break the higher low, you've got sideways pressure, and that's a decision to make. I have no idea what's going to go on with the charts, but I expect it is not going to be completely straightforward. It just isn't, because that's not how the markets work. Sometimes we get fortunate, but when you've got a massive move like that that's purely reflexive, there are some things to consider. I want to put one more line in here for the NQ. I've been trading it a lot lately. 15,050. 15,050. All right, take care, folks, and I'll see you on Monday.